If recent earnings reports from financial services giants have shown us anything, it's that consumers continue to use their credit cards cautiously due to the economic uncertainty created by the COVID-19 pandemic. Discover wasn't immune to those headwinds in its earnings out this week, but it did show a pretty solid rise in its student loan business. Let's bring in Discover CEO Roger Hochschild for more. Roger, always good to speak with you here. So looking at the quarter, you did see the credit card loans, those sales declined 7% year over year, but you did hop on your earnings call and you noted that you have seen a rebound in January. Why do you think that is happening, and what are the drivers of that rebound?
So we saw a positive trend in sales in terms of coming back from the lows of, March and April over the course of the whole year. And I think that the big story is how well the prime consumer has really held up. If you look at our fourth quarter, charge-offs were 80 basis points below the prior year, which I think is truly stunning this far into the pandemic. And that reflects the fact that a lot of households are doing well from a cash flow basis. And that's driving a higher sales payment rate on their credit cards, bringing down balances, but also a very strong savings rate.
Roger, it's Julie here. It also sounds like it reflects a little bit more you guys being a little choosier in terms of who you're going to extend credit to and how much, right? I mean, can you give us a little more color around that, around what's going on with your standards and what you expect that to look like this year?
Sure. So we tightened our credit at the beginning of the pandemic, both for the existing portfolio in terms of the number of line increases we give out, as well as our new account criteria. But we kept marketing throughout the year, probably more than most of our competitors. And that's why I think, we gained market share across all of our products. We've loosened modestly in our personal loan product, and we'll watch carefully in terms of trying to get a better trajectory on where white collar unemployment is going. That'll be a signal for us to start loosening. But I think, tremendous uncertainty as to where the economy goes from here in the next couple of months.
And, Roger, I wanted to follow up on that point because you gave a quote to Bloomberg to the effect of, white collar unemployment is something that we're watching closely. And I'm curious, both from the Discover vantage point and also just talking to your CEO peer group, if that is something that you think could pick up as we get into 2021. I know in the beginning of the pandemic, I was certainly very concerned about a second wave of white collar layoffs as results, kind of crater. Hasn't quite materialized, but is it something that you're kind of hearing about, or the rumblings of that coming down the pike?
Yeah, it is something I'm very concerned about. I agree with you. We would have expected to see it by now. And so that's why we've sort of pushed out our view on when losses will come. If you look at our portfolio, very few accounts even delinquent. And so you won't see the charge-offs moving up anytime soon. But I think there's significant structural pain across many industries, from retail to transportation. A lot of the early job losses were concentrated in entry-level positions. But we do believe a lot of companies will tighten their belts as they go into 2021. And this could prove challenging for white-collar employment.
So, Roger, it sounds as though that a potential next round of stimulus checks, which the Biden administration has hinted could be $1,400, does that halt those layoffs, or does that, stop some of the economic downturn caused by those layoffs?
I think it's really that second one. It helps soften the economic blow. That money will get spent quickly by a lot of those households, and so go into the economy and really start pushing us towards an overall recovery. I think you'll also see, continued flows into deposits, and you heard that from us as well as other banks, just the increase in savings for many consumers. And I think it really is that tale of two cities, where there are a lot of households who are struggling, but in the more upper income segments, people are doing surprisingly well. But certainly additional stimulus will be very helpful for the economy overall.
You mentioned this week on your earnings call, Roger, you're taking significant share in your student lending business. What's driving that, and who are you taking share from?
So we did see one of the major players back out of the marketplace. And private student loans is quite concentrated. There are about 3 banks that represented 90% of the volume. But we think we're gaining share from all the players. And it really has to do with the way we go to market. Even in, I would say, a challenging year where a lot of students, chose not to go to school, we saw strong originations. And that really reflects, consumers' trust in the Discover brand and a value proposition around good, fair pricing, but also the best customer experience in the industry.
Roger, what are you watching legislatively out of Washington on the student loan front? Because, of course, the incoming administration has now pushed back they've extended the ability of student loan borrowers to not pay right away until later in the year. And even though it's not in the administration's plans, there are still members of Congress who are pushing for more broad forgiveness. What do each of those things do to your business?
So it's important to keep in mind that over 90% of student loans are the federal student loan program. And so banks like us, private student loans represent a bit under 10% of the industry. So a lot of the attention is focused on the federal program. I think it's going to be a challenging environment for significant legislation to pass, other than, things like transportation or COVID relief that have broad bipartisan support, just given the narrow majority that the Democrats have in the House and sort of the 50-50 split in the Senate. So, over the last couple of years, most of the action in Washington has really been more on the regulatory side than on the legislative side. We don't see anything pending on student loans that'll impact the private student loan market.
And then, Roger, switching gears just a little bit, I'm curious for your thoughts on the broader fintech space. Certainly, there's been a decade now of buzz about new entrants coming in, but there's been, it seems, an acceleration in adoption among consumers as a result of the pandemic. I'm curious what you make of some of the trends we've seen, a couple recent IPOs in that space, and sort of how you see banking changing over the next decade.
Sure. It's hard not to be stunned by some of the valuations you're seeing in the fintech space. And a lot of those business models, I think we'll have to see how they prove out over time. I think Discover's position sort of halfway between a traditional bank and the fintechs, if you think about our pure digital model and the fact that we don't have any physical presence. Probably the biggest consumer trend we're seeing is the growth in buy now, pay later. And I think that does have appeal. We haven't seen it impact credit card revolving balances, so it appears to appeal to a different segment. But I'd say of the different fintech trends, that appears to be the one with the most traction.
Roger, we last talked before the election. Now the election has come and gone. We have a new president in the White House. Is it easier to be a business leader today compared to 6 months ago?
I think we'll have to see how that plays out. But clearly, I think what's most important to the business community is stability and having an administration that's going to focus primarily on the pandemic. And I think there clearly has been a gap in terms of coordinated federal action. My hope is the Biden administration will step in there, because at the end of the day, that's what's most important for the economy. And I think that's what most CEOs care most about. So we're, excited about the new administration and looking forward to working with them and supporting them any way we can.
Well said. We'll leave it there. Discover CEO Roger Hochschild, always good to speak with you. Stay safe, and we'll talk to you soon.
You too. Thanks.